My guest today and the organization that he's part of for the last 4 decades is synonymous with integrity. And of course, the organization that I'm talking about is also synonymous with almost the rule book of financial services in the country. I'm talking about HDFC, and the man is Keki Mistry right here in front of me. Keki, how does it feel? 4 decades being part of one organization.
It's a long time. When I joined in 1981, I did not imagine in my wildest dream that I would be forget working in HDFC, but working anywhere 40 years later. Honestly, I thought 20 years, 25 years enough. That's it. But things went on, things progressed. I must say the Indian economy opened up, so many opportunities were created. We were a pure play mortgage finance company.
We were a startup, if in today's like terminology.
Exactly, we were almost like a startup in October 81 when I joined HDFC. Little bit of housing loans here and there, 12.5% fixed rate interest. If you take a loan up to 10,000 to 20,000 was I think 12.5%, then 13% if it was more than a certain amount. And then that went on for about 8 or 9 years. And then we started seeing the reopening of the Indian economy. All started with 1992, the pressures that the economy faced at that time, the opening up of the economy, foreign investors coming in and putting capital into India. And I think that was a game changer. And then as the financial sector opened up, we started the bank, the life insurance, the general insurance, the asset management, the capital advisors, our real estate advisory services, and so many, the education finance business, and so many other things. So it's been a great journey.
Absolutely. I mean, you've risen with India's story, literally. But tell me, I must address the elephant in the room, the merger. Has it been on expected lines? On the face of it, everything seems to be at par.
I think it's gone exactly as we planned.
Yeah.
I remember talking to you just after we had announced the merger.
April 21st, 2022.
Absolutely correct.
Yes.
And I told you at that time, all is well. And all continues to be well. The merger has gone on exactly as we had planned in terms of timing, in terms of approvals. I must genuinely give credit to all the regulators, RBI, SEBI, IRDA, pension regulator, NHB, for all the support, the Competition Commission, for all the support that they gave us through the whole process. Everything, touch wood, worked really like a dream.
Did you have any sleepless nights though? There must be.
I mean, there is obviously some amount of excitement, some amount of anxiety when these things happen, but that's part of the game. So nothing extraordinary or anything very different from what one would normally feel.
Sure. For watchers of HDFC and HDFC Bank, it was never a question of if, it was a question of when, the merger, right? But when did you actually come to a conclusion that this is happening?
So we kept evaluating it time and again. We looked at it in 2008-9 during the financial crisis. We looked at it in 2014. And 14, we really spent a lot of time looking at it. But at that time, the regulatory cost of a merger was just prohibitive. It just didn't make sense. Then COVID happened, 2020, and then for 2 years, everything was forgotten. In 2022, when we reevaluated it, we found that many of the problems that were associated, the regulatory costs associated with the merger prior to 2014 had to a great extent got addressed. CRR, SLR requirement had been reduced. Priority sector, there were other methods of getting to the priority sector requirement. Liquidity ratios had been applicable to housing finance companies. So we carried the liquidity that is required in a merged entities. All the boxes sort of got a tick. And that's when we said, this is the time, and let's just go ahead and announce it.
Did it all happen here at HDFC House?
It did happen here. It happened here, this place.
Okay. How did you manage to keep it a secret? It was such a well-kept secret.
It was.
The timing.
It was. No, not the timing. I think the whole fact that it was happening was a secret. That it would happen someday could be 20 years later. No one, even in the wildest dream envisaged that in April 2022 we would announce. So we kept it a secret. We really genuinely worked in closed doors, kept a very limited number of people involved, very few external consultants, very few, very limited, excepting for lawyers who are obviously a must, hardly any other external consultant. Valuers, of course, but that was still the last 2 or 3 days. And touch wood, really touch wood. It didn't leak. There was not even a murmur. There was not
Well-kept secret.
There was not even a WhatsApp saying, "Is it happening?" Nothing.
So what's the focus area now of the merged entity? I mean, you're a behemoth in all right.
So, as HDFC Limited, the structure was always a little odd in the sense that HDFC did housing loans, HDFC Bank did every single product other than housing loans. So therefore, it just didn't gel too well. HDFC Bank customers would say, "We want housing loans." Then they would sell HDFC home loan to their customer. Then we entered into some kind of an agreement way back in 2003, 20 years ago, saying that HDFC Bank would source loans for us. We would do the credit appraisal, the legal checks, the technical checks. We would decide whether to lend money to a particular customer or not. If we lent money, the bank would have a right to buy back a certain percentage of those loans. We would continue to service those loans. So it was a complicated arrangement which every single year needed shareholder approval. So we said, I mean, whilst this arrangement can continue for a few years, if in the long term a merged entity makes the whole thing simpler and stronger. Because with a bank you have access to CASA deposits, current accounts, savings accounts, and your regulatory cost is really a one-time cost on the back book. On the new book, there is never a problem in meeting the regulatory costs. So touch wood all makes sense.
Sure, but there ought to be some teething troubles or some things that you got to hit first for the combined entity.
So there are the potential for growth is phenomenal. Sure. To my mind, the asset growth opportunities in India are just unbelievably strong. And I'm not talking only mortgages. I'm talking of just about every single financial service product you can imagine. Because the penetration levels of every financial service product in India is lower than most parts of the world. So there is phenomenal growth opportunity. Also, we have a young population. 2/3 of our population is below 35 years. People want to do things. People want to borrow money. People want to buy things. Aspiration levels have really risen over time. So all this creates so much of opportunity for growth. And as far as mortgages are concerned, that I can tell you with complete confidence that the growth is not there for 1 year or 5 years or 10 years. To my mind, it is there for several decades.
But is there something in terms of a roadblock or a teething trouble that you would first try and address for the merged entity?
I would say the first thing is the fact that people have to get start working together as a team, integration. Fortunately, that was not as much as a challenge in this merger as it could be for other mergers.
Yeah, because your ethos is pretty much the same.
One, ethos is the same, and two is there is no product duplication.
Clash.
There is no product clash. We do mortgages, bank does everything else. So for certain functions, yes, corporate functions, there is a clash. But for everything else, there is not a clash. So yes, some time will go in the process of integration, a quarter, 2 quarters, before the full synergies of a merger can emerge.
But besides integration, which is an internal thing, externally, the combined unit, is there any roadblock that you sense?
Not that I see. I mean, the biggest requirement to my mind will be funding, because the growth opportunities are huge. Funding today, fortunately, the bank has been very successful.
One thing, and who better than you to answer this, because the combined bank will now have nearly 30% of your loan book coming from home loans. Do you see this share rising in future as the penetration gets deeper and deeper? And like you said, it's the aspirational Indian. Everyone wants a bigger, better house.
In my view, yes, because the growth opportunity in housing in the coming years can be huge. If you look at the year ended March, HDFC's individual loan book grew 17%. Now, with that 17% growth that we had in the individual loan book was on the back of the fact that the loans sourced by HDFC Bank was only 30% of what we did. Now, can you imagine that if the entire bank platform of branches was available for distribution, which it now will be after the merger, then what kind of growth we can see? If you look at penetration, the bank has something like 7 crore customers or more, 70 million plus customers. Only 2% of those customers have taken housing loans from HDFC, only 2%. So look at the ability to cross-sell to the 98% who don't, of which 5 have taken loans from other banks. So it's a huge cross-selling opportunity.
Historically, you've grown at a run rate of 18 to 20% loan growth. You think in the years to come, that'll be the new normal, the line in sand?
In my sense, in my view, that can that should be there. It could even accelerate over time, but 18 to 20, to my mind, would be certainly the target the bank will have.
Right. In 1990s, and this is what researchers and people who've monitored your company back then have told me, that you set a clear target that you're going to improve your return ratios, or return on equity rather, by 100 basis points every year. You've managed to deliver that pretty much by far. But can that be the run rate going forward?
Very difficult to increase the return on equity by 100 basis points now. In those days, when we told investors we would do that in the 90s, it was doable, and we did it for almost 12, 13, 14 years. But at that time, the HDFC was not a financial conglomerate. We were a housing finance company largely. We had the bank, we had life insurance, we had just started life insurance, general insurance, but the amount of capital that we had invested in these companies was limited. So your return on equity is a function of your total capital and the returns you get. Capital that you put, for example, in insurance business in the early years does not generate returns straight away. It generates returns over a period of time. Probably first 8 years, 9 years, it does not generate return. That's one reason. The other reason is also that regulations now require larger amounts of capital to be retained in a bank than was the case in the 90s. So increasing return on equity by 100 basis points, to my mind, is very, very difficult. But in those days, what we told investors is 4 things. One is our return on equity will rise by 100 basis points a year. It did. That our cost income ratio, we would bring it down to single digit, which we did. Third was that we would take no asset liability mismatch in our balance sheet, which you see consistently we've not been able to do. And the fourth thing we told investors at that time is that, we will focus on service and some of the soft issues.
That's the other thing, and I must commend you for it. And we were chatting with a lot of people, as HDFC got ousted from the index, and HDFC Bank was one of the largest entities. And over the course of time, everyone has really lauded the group's ability to very clearly communicate with their shareholders and stakeholders, much as the clarity that you had in 90s, that, 100 basis points is the return that we're going to give you.
100 increase a year.
Increase a year, yes. Do you have that kind of a target now for the combined entity?
Once the combined entity settles down, I'm sure the bank will put down certain targets on what they will aim at. The targets could be in terms of growth, it could be in terms of asset quality, but that is something which a bank will have to evolve once the integration process is completed in some respect, say over the next 1 or 2 quarters.
Sense on where it could be headed.
In terms of growth, of course, there will be targets in terms of growth. There'll be targets in terms of returns also. The bank's capital adequacy is high. They don't need capital for a long time. So therefore, they can sweat that equity and generate a higher return on equity in the coming years. But whether you can grow by 100 basis points a year, every year, year after year, to my mind, is a challenge. Is a huge challenge.
Not. But there's got to be some range that you may be having.
So there will be a range the bank will have in terms of the return on equity, and a range the bank will have in terms of growth, and of course in terms of asset quality.
Bill Gates once famously said that banking is necessary, banks are not. We're seeing so much disruption take place in the world around us, right, on how businesses are done and what businesses we need for the future. What do you think will be the shape of the banking industry, say 10 years from now?
See, 10 years ago, Ayesha, nobody really had, digitization and automation and stuff like that was really not there. People now, particularly after COVID and particularly after the initiatives that the government has taken, and we must compliment the government for all the initiatives they've taken to to create that awareness about automation, about digitization. People have become much more savvy, are much more willing to, buy things or do things on the net. But you take housing loan as a product. That is very, very different. What we used to see at HDFC is that irrespective of what level of automation, what level of digitization you would get in the country, people would want to meet you, talk to you, understand, get their confidence that, on a variety of matters before they bought a house. That may not change. But yes, disruption will happen, but it's being closely monitored by the regulators. So I'm sure the regulators will have a big role in ensuring that nothing gets out of control. This is the time when the regulations need to be, fairly strong.
The other thing about the HDFC group also has been corporate governance, and what you just said takes me to that. How is it that the old guard will ensure that you protect the legacy?
See, you have to look at it like this, Aisha, that HDFC Limited started, and then all the other companies grew over time, bank, life insurance. So in a way, the ethos, which is governance, don't do anything which is
Wrong.
which is wrong, is something which has percolated down to every organization. I can't say that one individual in some location doesn't do something wrong. These things do happen. But the structure, the ethos, the feeling, is ingrained in everyone. What we used to do at HDFC is we used to hire people fresh out of college as a rule over the years. And then they would join us as management trainees. They would work with us for 2 years as management trainees, during which we would assess their strength, their, what they were good at, put them at the right job at the end of 2 years. But the single biggest thing attribute we looked at the time when we hired the person was our sense about the family background, the integrity of the individual. And whilst mistakes could be tolerated over time, we would never, ever tolerate a single case of, anything which goes against the principle of governance.
So what's next for you? How does life change from Monday onwards?
Well, I'm on the board of a few companies.
Yes, you are.
I'm on the board of TCS, I'm on the board of Flipkart, I'm on the board of now HDFC Bank, and a few other companies. Many people have come with suggestions on which boards I can join or stuff like that. But because the bank will have some kind of a relationship with these companies, that becomes a bit of a constraint. I have certain plans, Aisha.
Which is?
Too premature at this point of time
Writing
to talk
a book?
about it. No.
No?
Nothing as mundane as that.
Right. So have
more challenging.
More challenging.
Much.
So you're going to continue working. There's no time out for you.
Yes.
No relaxation.
1 year.
Okay, great. So if you had to really summarize your 40 years at HDFC, or even describe the group, if you had to write a billboard caption for it, what would it be? What comes to your mind?
I'd say a lot of opportunities came along the way, but frankly, I never, excepting for one case, and I won't name that company, excepting for one case where I was really tempted in 2013-14.
The role of the money, or all of it?
It was a role of, it was a senior, very, very senior role in a very large group, but forget that. That was the only time I was tempted. Otherwise, there were other offers which kept coming. I was never tempted because we created a sense of well-being, a sense of, feel-good factor which was there. There was never any tension when you came to work. And when I started working, the one principle I kept in mind is that ever you start feeling on a Sunday evening that God, I have to go to work tomorrow. That's the day you have to
That should be your last day.
That never happened. In 40 years, it never happened.
What kept you going?
What kept you going?
Yeah.
Opportunities kept coming. As I said, the financial sector opened, different roles, different opportunities came up to fund the growth. So many challenges. And innovation happened, technology changed over time. So there was something or the other challenge and all happened. It never resulted in a time when you could sort of take off and...
Right. So I know you're a cricket buff. If you had to describe HDFC in its standalone avatar before the merger took place, which cricketer comes to your mind?
Sachin Tendulkar.
Sachin Tendulkar?
100%.
The combined entity? Also Sachin.
Yeah, Sachin.
Okay, he's your favorite clearly. Okay.
And before him, Ajit Warekar and Farooq Engineer.
Yeah, of course. What would be your advice to Sashi?
I think what I like about him, or whatever little I've seen of him or met him a couple of times, is humility, humbleness. He's very humble. He never shows that he's somebody. And that's the way I would like people to shape up their lives. Because the day you start thinking you're somebody, that you arrive, that's the day, that's the end of your growth. That from there on, you'll only start people's tapering.
One message to youngsters, who can't stick with a job for even 2 years. You managed to stick it out for 40.
I would say not 1, 2, 3 things. One is you have to have stability. You can't expect success overnight. There is no shortcuts to success. It has to be a long drawn process. Never give up. There will be plenty of failures you'll have in life. It doesn't mean much. Failure is just a way of learning that this is one thing you should not do in life. And third is, whatever you do, don't lose your humbleness, don't lose your sense of, where you are, that you are just one out
Be
of...
grounded.
Be completely
Yeah.
grounded and never compromise on integrity.
Right. I also know you're a Hindi film buff and you love old songs. Only songs, okay. Old songs. You wouldn't want to sing a line for us?
Say songs which I used to like were Hemant Kumar's Khamoshi, Tum Pukar Lo Tumhara Intezar Hai. I can't even pronounce,
Tum Pukar Lo.
That was one. Many. There are umpteen ones.
If you had to describe your last 40 years at HDFC, which is the song that comes to your mind?
Hum Rahe. I think it was
Okay, great. Thank you so much for taking the time out, and here's wishing you an amazing next decade as well, and many more after that. Thank you so much.